Namaskar. Hello and welcome to PGurus channel. I'm your host 𝙒𝙖𝙩𝙤. Welcome to episode 354 of Daily Global Insights. And joining me is my co-host 𝙒𝙗𝙤𝙤 as we look at the markets last week and what lies ahead. 𝙒𝙗𝙤, Namaskar and welcome to PGurus channel.
Namaskar. Good morning to everybody, and we are excited to be here on Sunday.
𝙒𝙗𝙤, thank you, sir, for taking time out on your weekend. You've been traveling and you've been very busy, but as I can see from your backdrop, the bear is out playing golf. I'm sort of amused because it's a bull market or a bear market, but if the bear is out playing golf, does that mean that the bulls are going to be having fun? So kind of break it out for us, sir. Let's start with bonds.
Right. I think that, I always keep the bear playing golf because, maybe I'll change it to the bull when, the bulls are on the rise. But right now, the bulls are not on the rise. They're just, they are hiding somewhere while the bear says, I'm relaxed because I'm having a great time. Having said that, okay, now coming to first, we are touching the bond markets. The reason bond markets we are touching is there's some interesting data that you need to look at because it will flow into the rest of the world. The 1 month is the only one which is showing this U.S. Treasury bills is showing the only one which is showing less than 3%. It's 2.649%. Rest from 3 months to 30 years, everything is priced above 3%. So you can see that 1 year, 2 year, 3 years, 5 years, 7 years, all priced, which is reflecting the sentiments in the markets that there is a big interest rate hike coming this particular week. Remember, just less than a year ago, around the same time, we were talking about whether we will hit 2% before the end of the year, and 1.65% was the 10-year bond. Now we have added 200 basis points since then, reflecting two things. One is inflation, and second is ever problematic supply chain around the supply side.
𝙒𝙗𝙤, quick question for you. If supposing somebody were to look at the bond chart that we just put out and try to say, what would be my interest rate? Can you give us some ballparks? Like, it doesn't have to be very accurate, but people who are considering buying homes may be able to kind of draw their own conclusions, back of the envelope calculations, and so on and so forth. So if you could just, let's say I want a 30-year loan. Just 1 second, sir. I'm going to bring up this thing. I want a 30-year loan, and today it's looking at 3.519%. And if I want to buy a house for 30-year fixed, let's say, would that be something like what, sir? What would be the percentage?
Well, if you haven't fixed your 30-year loan now, or if you didn't fix it 6 months ago, I think you are now looking at anything between 5 and 7% in your 30-year mortgage rates, because the rate increase is not going to stop at this stage, and all that doesn't matter whether it's 5, 7, 10. It's all indexed to the prime rates, and typically in some manner linked to the T-bonds or the treasury bonds. So you are looking at a mortgage rate somewhere between, at least between 5 and 7 or even 7.5% in the US markets. Rest of the markets has a correlation. I think the prime rate in India, because there's quite a few Indian listeners, is around 5.5% right now. 5.5%. Say prime rate is around 5.4%. You can imagine once the U.S. rates go up, there is a correlation, and you can make your own arithmetic in terms of what happens there. Then the other one in Australia, for example, which we track, is already above 6%. The mortgage fixed and the variable mortgage rate. So you're going to continue to see rate hikes. This is the reason why both new home sales and existing home sales has seen sharpest decreases in recent months, and we expect more housing data this particular week. So that'll also give us some indication. So some headline: if you haven't bought a house, this is not the best time to buy a house if you're going into the market to take a mortgage.
And thank you very much, sir. And let's take a look at the stocks now. Sridharji, take it away.
Well, I think that the most important data that we want to point out is that both Dow and S&P has been progressively going down day after day. We had 1 week complete last week of losses. The most important thing that I want to point out is, we'll get to that in a minute. S&P was down 4% on Tuesday. Why 4%? We'll get to that. But before we do that, Dow, S&P, NASDAQ have been down year to date. I think Dow is down somewhere less than 16%. S&P is down less than 20%, and NASDAQ is down less than 28%, at least in the US market. That has cascaded itself, at least in the European markets. I think when you look at the Indian markets, we'll get to that in headline summary separately. But the markets have taken a hit, and we can continue to see the market gyrations. The 4% has not happened many a times on a given day, S&P being down. So let me just check as to when was S&P ever down 4%. S&P was down 4% since 1980, 51 days. It dropped 4%, of which 21 days it dropped during 2008, 2009, and 9 times during 2020 during the pandemic. So, but in all occasions, the markets have somehow clawed their way up. So that is the Cape of Good Hope in terms of the market gyrations that is driven by primarily 2 factors, which is the inflation factor and the uncertainty around the supply chains and any ease in the supply into the market.
And oil, again, the West Texas Intermediate is at $85.40, and Brent is at 91. I'm trying to make sense of this. I would expect natural gas to shoot up because of Nord Stream 1 being turned off to Germany. I don't know. Is it already factored in, Sridharji?
Well, I think that the first is a supply. I mean, natural gas, a good chunk of it is used in the United States. Remember that if there is no supply, there is no mechanism. The prices will go up if US can establish a mechanism to supply natural gas into Europe. So there's no point in the price being high, because in US, for the US markets, Qatar is another big supplier, and they have already tied their supply and pricing to many of the markets in Asia and the near-shore markets. So therefore, Europe is suffering because it's not a price issue. It is just a question of supply issue and the availability issue. And I think they will address it. I think we covered this. They may be going back to nuclear, coal, and other forms. So which is the reason why you are seeing the natural gas, the price being locked where it is. But having said that, oil and, the West Texas crude and Brent, just to give you a perspective on West Texas and crude, West Texas year to date, at its peak, it was $85.11. And on the down, when we started, we started at 78.98. We already saw the climb. And as far as the, West Texas was at 76, and it is now 85.11. The peak was 97.01 on August 29. This is when around this time when Russian was cut off. Remember, West Texas trades in United States, Brent trades in the UK markets. The Brent actually tapered from 78 to 91.5, 91.35 you see today. But it peaked at 127.98 on March 8th, just after the launch of the Russia-Ukraine war. So there is very high volatility around the Brent by virtue of issues in the European side and the need. And whereas in the US markets, you see less than 7 to 10% gyration on the West Texas crude, because it is consumed, refined locally in United States. And gold and silver is the other. Everybody touted gold. Gold has dipped below 1,700. It's at 1,684. And silver has dipped. And copper remains, fairly steady and high, because there is still demand for copper and there is supply on the copper side. And of course, the question is it's a competition between India, some of the emerging Asian countries, and China, which are the big consumers of copper, along with Japan. The currency, we have also touched on the currency side. The European euro went below $1 for the first time, and it just clawed its way back, and it's like 15th basis, not it's 15 by 1,000 basis point, just about dollar. Pound and euro to pound also took a hit. Pound also dipped for the first time. You can see British pound to US dollar is not at 1.3, it's at 1.14, and euro pound is less than a euro. All this is because, as you all know, that Britain is also suffering from inflation, suffering from energy crisis, suffering from supply issues, and suffering from domestic unemployment as well. So Europe and Britain has got a problem, and Britain seems to have a far worse problem relative to Europe. Europe fundamentals seem to be okay, but except for the energy crisis, which will cascade into various parts of the manufacturing industry.
Sridharji, what to expect this coming week, sir?
What to expect this coming week? This coming week is going to be very important within the context of where the rates are going. Now, originally, when the August inflation number was expected to be lower than July, they expected only 75 basis points and what we call terminal rate at which the central banks will say, okay, enough, and will now allow it to the monetary policy to flow through the system to bring the inflation down. That percentage was pegged at 4%. That's what markets had priced. Right now, based on the August inflation number and trends in September, there are now indications that this number could go anywhere between 4 and 5%, which is why I told you the market rates. This is prime lending rate. This is not the lending rate that the banks offer you. This is the prime lending rate that the banks lend to each other and the central bank lends to the banks. That is now expected to be somewhere north of 4%. Is the band that they're looking at. That is the number that we will be looking for this week. And if that is the case, and if that is definitive, the markets will factor that in and we'll see some stability. If the central bank issues some uncertain statement, which is to say we are keeping a close watch and we'll make judgments as is appropriate, then you will see more turbulence in the stock markets based on what happens this week, Sriji.
Thank you very much, sir. And that brings us to a close of this week, the markets. And we'll be back again specifically to cover the markets next Sunday. But during the week, we are going to be covering all the events around the world. Thanks for listening. Please like, share, and subscribe to our channel. And don't forget to click on the bell button for notifications. Thank you very much, Sridharji. Namaskar.
Namaskar. Thank you very much. Have a wonderful day.